Hello guys, I hope everyone is doing great. Today in this video we're gonna discuss the concept of balance of payments. It is widely used in economics in this video, so we're going to talk about the meaning of balance of payments and the components of BOP as well. But first, know that a country has to deal with other countries in respect of the following: visible items, which include all types of physical goods exported and imported; invisible items, which include all those services whose export and import are not visible, example, transport services, medical services, etc. Lastly, capital transfers, which are concerned with capital receipts and capital payments. So, the balance of payments means, or it is a summary of economic activities between the resident of a country and the rest of the world during a given period, usually 1 year, which is a specific period of time. The balance of payments helps us to understand a country's position in trade of goods and services in the world, its income and capital flows with other countries, and its exchange rate policies. It is another definition of balance of payments, so it is a statistical statement that systematically summarizes for a specific time period the economic transactions of an economy with the rest of the world. So in this definition we mentioned that the balance of payment is summary of the economic transactions over a period of time. So what do we mean by the economic transactions? Let's talk about those economic transactions. So they include transactions in goods, services, factor compensation, and assets. Although trade is an important part of BOP, but BOP is not just about trade. Its coverage is much more broader. BOP summarizes these transactions for a specific time period. So it is a flow concept like a company's income statement, which summarizes a company's revenue and spending for a particular time period. Now, the balance of payments is recorded using double entry system. Each transaction involves recording credit and debit entries such that they are precisely offset. The balance of payments records each transaction as either plus credit or minus, which means debit. First, credit refers to a flow for which the country is paid, means inflow of funds, for instance, exports of goods, services to foreigners, income generated from investing abroad, sales of assets to foreign investors. However, the opposite, debit, is a flow for which the country pays. It is the outflow of funds, for instance, or for example, imports of goods, travel expenses in foreign countries, income paid to foreign investors, and purchases of foreign assets. As I mentioned earlier, that we will be talking also about the components of the balance of payments. So the BOP is divided into two major accounts: the current account and the capital and financial account. First, current account represents the net sum of trading goods and services, primary income and secondary income. First, trade balance refers to net export, means export less import of goods. Secondly, net services income and transfers. Net services are the net result of foreign trade related to services, defined as the net export of services. And primary income comprises compensation of employees, means wages, salary, and benefit both in cash or in any kind. And investment income, direct investment income, income on portfolio investment, and other investment earnings. Secondary income refers to donation or grant paid to or received from non-residents, which results in transfers of ownership over real or financial resource. Next, we have capital and financial account, which consists of capital account and financial account. So first, capital account encompasses receipts and payments pertaining to transfers in cash or any kind, for instance, investment agreement, transfer of ownership of fixed assets and debt forgiveness. And secondly, acquisition and disposal of non-produced, non-financial assets, tangible assets such as land, and intangibles such as patents and trademarks. First, financial account refers to the net flows of financial transactions between residents and non-residents, reflecting changes of ownership over financial assets and liabilities, which may be categorized as direct investment, portfolio investment, financial derivatives, and other investment. The financial account records all international purchases or sales of financial assets. Direct investment reflects the lasting interest of non-residents of an economy in a resident entirety. Secondly, portfolio investment refers to transaction that involves buying and selling of equity securities, debt securities in form of bonds, notes, money market instruments with the exception of securities classified as direct investment and reserve assets. What do we mean by financial derivatives? First, what is a derivative? The derivatives are financial contracts set between two or more parties that derive their value from an underlying asset, group of assets, or benchmark. This item records only realized gains and losses, not the notional amount. Other investment includes loans, trade credits, deposits, as well as other account receivables and payables. What do we mean by net errors and omissions? It reflects the discrepancy. Discrepancy here means that a difference between two things that should be the same. So it reflects the discrepancy between the overall balance and the sum of each sub-account of the balance of payments. At the beginning of this video, we have the key terms we have discussed in this presentation. Of course, they are translated in Arabic, so they may help you in order to understand more. And this is the end of our lesson. See you soon.